Okay, we're live. Hello, everyone. Welcome and thank you for joining us. Today, we're diving into one of the most pressing questions for commodity markets right now: what El Nino means for your second half of 2026 exposure. And I'm joined by two great guests who will introduce themselves in a moment, and we'll be taking your questions live at the end. So please keep them coming throughout the session. Joao, I will pass it to you.
Thanks, Rosanna. Hello, everyone. João Marciani here, recent hire of Helios. I've just joined the team as Helios Senior Agricultural Analyst. Super happy to be here. You'll probably see me more often in this monthly webinars and all the content production of Helios and hopefully at conferences around the globe. Today, I have the honor to host Dr. Setia Varka, a big expert on palm oil. Dr. Setia, if you could give us a quick introduction, I would really appreciate.
So no problem. So my name is Satya, as Joa said. Joa and I used to work together in Fast Markets. I'm still with Fast Markets. Fast Markets, I'm a regional managing editor in Asia, based in Singapore. We cover palm prices, news, market commentary, and data on a daily basis. So that's who I am. That's the company I work for.
Thanks, Doctor. So, guys, I'll run us really quickly on the agenda. So today, we're gonna talk about El Nino, what will means for the eggs complex. Um, I'll give us a quick introduction of the current market outlook. Then we will talk a little bit about what Helios models are already capturing on the climate risk profile for the second half of 2026 and 2027, which commodities will be impacted, and then as the relevance of palm in these markets and its exposure to El Nino risk, I'll pass the mic to Dr. Setia, and he will give us a little bit more of context of the current market outlook for palm. So thanks again for attendance. Super happy to be here. And yeah, let's get to it. So 2026 has been quite a year, right? It's the year probably of a year of compounding shocks. We started the year with a not a really positive scenario for farmers. We have keeping adding some risks into the whole market, and now we have El Nino coming. No one just confirmed its occurrence in the next quarter, and there are lots of impacts coming into the whole ags complex. So let's start with 2026. It's been quite a changing and volatile year, and it has already started in a way that wasn't as positive as it could be for farming. Of course, the ag markets is a whole universe. You have different realities within commodities, within regions, so it's not true for everybody. But certainly, if we look at the average farm margins, we will see lots of farmers on a bad spot, going from farmers in the U.S. to Mato Grosso farmers in Brazil, to palm oil producers in Southeast Asia. Something that was common for all these markets was the high inputs costs. Since 2020, we had experienced severe supply chain disruptions on the inputs industry. In 2020, we had the Chinese lockdown that led to a shortage of agrochemicals in the markets. Not only the agrochemicals, the molecules that are used into their production. Then move forward to 2022, you had the Russian invasion of Ukraine that disrupted the energy market, the natural gas markets, that led into a sharp increase of nitrogen fertilizers and phosphates because of the relevance of that region on the supply of that industry. Um, and we opened, although we had in 2020 all the way to 2022, that higher inputs cost was followed by higher commodity prices, so that supported margins. But then we saw the easing on the whole ags prices complex, but not that easing followed by the inputs cost drop. We certainly saw some easing, but margins were compressed, and we have seen lots of farmers that were quite exposed, were quite underwater with and with less space to problems, yield related problems, and especially smallholder farmers. Ultimately, if you have thin margins, you have less conditions to apply more fertilizers, and that ultimately will reduce your agronomic cushion for extreme climate events. And then moving forward, we had the U.S. and Israel attacking Iran by late February. Uh, we are This is a still ongoing situation. We had oil trading above $100 for a couple of weeks. Urea spiked to 80% above pre-war levels. It has eased, um, but it's still 40% above what it was, the price levels of pre-war, and it is a ongoing risk. We had some relevant achievements in the past weeks. The U.S. and Iran has signed their memorandum of understanding. However, it's not certain that peace will be made and that we will have a normalization of the trade flow on that region. There's lots of bottlenecks stemming from that, from the conflict, not only exclusively to net gas. Of course, that is the world hub of natural gas, so that's why it has such lots of impacts on the urea industry. But if you look at the other of the other of other two other products like ammonia, that is a feedstock used in urea, that price haven't eased as urea has it. If you look at phosphates, it's also a bottleneck because of the relevance of sulfur acid of that region. So we have lots of bottlenecks coming from the Strait of Hormuz, more compressing of margins. Not Farmers that have their crops on the ground, they haven't felt too much this shock, but certainly the next crop will be impacted with way higher prices. And then we have El Nino. El Nino is a second shock that is forming. NOAA just confirmed on their last report and raised the occurrence of El Nino in the second half of 2027. For those that are not aware, El Nino is a natural phenomenon that is characterized by the sea surface temperature. So if you have warmer than the average temperatures of the Pacific, that will characterize a La Nina. If you have it below, it will be a La Nina. And what that means is basically for each phenomenon, you have specific climate conditions, and affecting different regions in different ways. So, what are the commodities and regions that impacted? As I said, it doesn't hit everywhere the same way, and I invited Dr. Satya because of the exposure of Southeast Asia to El Nino impact. So probably the most severe region that is affected by the drought provoked by El Nino is Southeast Asia, which is the powerhouse of palm oil production. If you move to South America, you have a drier pattern in northeast Brazil, northeast South America, and a weather pattern in the southern region of South America. So what that means, we will have some yields impacts on soy, but they are usually offset by the southern production increases coming from the weather season. But that can have secondary impacts on the safrinha corn crop in Brazil, because usually when you have a El Nino years, there is a delay on the soil planting that leads into a delay into of the second crop corn planting. And the second crop, because of the rainfall pattern of that region, it is super sensitive to the planting calendar. So we might see some secondary impacts next year. When you look at the sugar production in Brazil that is concentrated in southern Brazil, we will have probably have a wetter season, which means for cane production a increase of the total tonnage per hectare. However, the total recovery sugar is reduced, so we will have more cane but less sugar per cane. So it's a kind of a double-edged impact. If you move to the other big guys on sugar production, India, Thailand, will have impact on the monsoon rainfall systems that might lead to a drier season. It's worth to highlight that India has the largest acreage of sugarcane in the world, although they are not the largest producer. And the Indian production system is characterized by smallholder farmers, less fertilization, so they have less of a technological cushion to deal with adverse weather. And the Americas, US, Argentina, the big guys on grains and oilseeds, they're kind of safe for El Nino risk. And what are our models capturing? So if you look at our proprietary data on the elevated drought risk days, which that means that is the so that risk that index means the percentage of the days that are on elevated drought risk that are on drought above the historical average for that region and for the climate profile of that specific commodity. So if we compare the impact, the climate profile of 2026 and 2027, we already can see some severe impacts on the perennial crops, from coffee in Southeast Asia to coffee in Brazil, palm oil in Indo and Malaysia, and coffee in South America. There, all the tropical crops will have. We are already capturing the increase of their risk profile. And when we zoom in into palm production, our model is capturing the cleanest expression of this increase on the risk profile. So that region accounts for nearly 90% of the global palm production. The rest of it's more of a marginal production. So Indonesia and Malaysia basically dictates the markets. Um, and this and our model is captured a significant increase on the drought risk, especially by the second half of 2027. And it worth to highlight that historically El Nino years, the yields the El Nino year the El Nino impact lags into into palm yields. So usually you have a reduction of palm yields after 6 to 12 months of the peak drought provoked by El Nino. So it has been quite an interesting year. We are seeing these structural changes, especially stemming from the demand side and from the inputs industry. On top of that, especially if you zoom in into veg oils has been quite a year. We had soybean oil rallying more than 60% in the year, triggered by biofuel demand. We have the U.S. Approving the largest mandate of their history. We have Brazil increasing the biodiesel mandate, kicking in 2027. The second generation biofuels mandates for the first time on SAF and renewable diesel. We have Indonesia moving to a B50 mandate, the by far the highest in the world. So we had all these structural changes in the demand that is pulling the veg oil complex prices higher. And on top of that, now we are starting to see an increase of the risk profile for the largest veg oil producer in the world, palm oil. So, with that said, I'll pass the mic for Dr. Satya, and super curious to hear on the market outlook and hear from you, Doctor. Thank you.
Oh, thank you very much, Joa. Let me try to share my presentation. Share
Yes, sir.
screen, window, share. Okay. Okay, great. You cannot see my presentation yet. Okay. Okay. You can see my presentation now. So let me just. So thank you very much for joining me this evening, my time, is here in Singapore. So I just want to take over from what Joard was saying about the impact of El Nino on palm oil, and he has made some references to these. So, what can we see is that let me just try to shift the slides to the next one. A bit slow. um, okay, yeah, it's moving, right? It's moving. I can see what's happening here. Let me see. I've got a few windows open here. It's all the same thing. Okay, that's all right. Okay, just trying to go through the next slide. Just a little slow in shifting the slides here. Mm, okay, yeah, I think I just rolled the mouse. That's better. Yeah, that's better. Okay, so I want to start by saying that there are going to be three main factors that will have a major impact on commodities, equities, currencies, bond markets, and all the other financial instruments for the second half of this year and into 2027. The three main things we got to watch is number one, geopolitics slash crude oil. So they're together. Number two is the El Nino weather, which Joa spoke about earlier. And the third is biofuels mandates. So these are the three main factors that will shape crop prices in the second half of 2026 and into 2027. So this evening, my time, I just want to talk through the main thing, which is the El Nino impact on production of palm and also on the price impact from the production. So, five main factors to influence palm prices in 2027: El Nino, I mentioned earlier; biofuels, which I also mentioned earlier; Indonesia export policy, which is brand new. It's an evolving government announcement. Indonesian government is trying to centralize the export gateway. That means all exports must go through state appointed agency. Exporters are not happy. There are still a lot of questions around it. It's not clear what and how this will shape out. The implementation is now ongoing. The government is evaluating. Exporters can export directly, but the government is watching and studying on how this is going to work out. And then in January 2027, there'll be one agency that will control the exports. Fertilizer supply is a problem. I don't want to repeat that, particularly among the smallholders. Remember, smallholders buy fertilizer for this year to use this year. However, large plantations buy fertilizer 1 year in advance. So they bought in 2025, they've used it and still using it in 2026, but the worry is 2027. If the Strait of Hormuz is still blocked, production has not come back on stream, how will these large plantations secure their fertilizer, apply the fertilizer, and what will be the impact on production? Crude oil, I mentioned to you this earlier. So why is palm disproportionately exposed to El Nino? Number one, palm prices are discovered in the futures market, CPO futures on Bursa Malaysia derivatives, BMD. As you know, futures market means there are so many variables that's going through the trader's mind: fundamentals, technicals, speculation, weather, and others. So, any stories, any impact, any data that shows a strong El Nino means production will be impacted and market will be pricing in a future price rise. So that's why it's very critical. Palm is a perennial crop, unlike soft oils like bean oil, sunflower oil, canola, which are seasonal crops. Palm, once planted, it will give you production for the next 24 years. So that means any impact of El Nino means production will be severely impacted. Palm trees remembers drought. So like Joa said earlier, production impact will be felt 6 to 12, 18 months uh, forward, depending on the severity of El Nino. Palm is the cheapest edible oil or the most competitive edible oil, so it sets the floor for the rest of the oils. Remember, four oils command 88% of global edible oil market consumption: palm oil, soybean oil, rapeseed oil, and sunflower oil. Palm oil is a leader there. Last point is energy transition risk. Many countries are using biofuels to transition from fossil fuel to clean energy. And in this process, countries like Malaysia, Indonesia, Colombia, Thailand are all trying to use CPO, crude palm oil, as a feedstock for the production of biodiesel. So any impact on supply will have an impact on biodiesel mandates. So these are the four reasons why palm is going to be more disproportionately exposed to El Nino compared to any other crops. So let's look at palm prices. Right now, palm prices you can see is the blue line. Sorry, it's yes, it's a green line there. It's just trading the above the soybean oil. Soybean oil still holding a bit of a discount there compared to CPO. I drew the vertical line there to show when the war started. US Iran war started on the 28th of Feb. So I drew a line. And since the war, all the prices shot up. As you can see, a little wave there. Sunflower oil went up. Then the red line, sun oil, palm oil, bean oil. But however, some prices have now come down. Rapeseed oil coming down very fast because of better crop. However, the use of rapeseed oil in the biodiesel production in Europe has slowed down after the recent easing of crude oil prices, and that's really bringing down rapeseed oil prices. Bean oil prices is also coming down because of the recent harvest from the South American countries. And remember, Argentina is the biggest exporter of soybean oil. So that's where the prices are relative to each other. You can see bean oil and palm oil is very close to each other. That means they're competing for market share. They're competing for market share. So how will El Nino impact palm prices? Okay, so here is the CPO futures on Bursa Malaysia. So far, palm prices are doing better compared to the last year. Palm prices are doing better in April, May, June compared to the previous quarter. So we can expect plantations to report positive earnings. Palm prices are currently a bit under pressure because we are going into peak production season. August, September, October are peak production season. June production looks very promising. Therefore, prices are a little bit under pressure. So the market is not really thinking so much about El Nino right now. Market is mainly thinking about we're going to have good supply. Let's keep the prices under check for now. Okay, so what is the main impact? El Nino has an impact on palm trees badly because it will lower the yield. Water is critical for palm trees and other crops. Although palm trees can tolerate 1 month of no rain, but not 2 months of low rain. There will still be fruits, there will still be yield. However, the amount of oil in the fruit is less and less. You will also have high female flower abortion. So if there is not enough rains, El Nino means lower than usual rain, drought condition, high temperature. So if there is not enough rain, there's no moisture, the tree will try to conserve energy. When it tries to conserve energy, there will be more male flowers compared to female flowers, because female flowers are more resource intensive. They need more water, they need more carbo. So therefore, the tree will react to conserve energy. The fronds will be down. Production of female flowers will be less. There'll be more male flowers. And this imbalance in the sex ratio means there'll be less pollination and lower fresh fruit development. And this can persist for 2 years, 3 years, depending on the severity of the El Nino. Okay, let me just move on. Okay, here we look at the previous episodes of El Nino and its impact on production. So, if you want to study El Nino and the impact on palm production, the best case study episode we can refer to is 2015, 2016. We had a very bad El Nino starting from May 2014 all the way into 2015, and then production was badly impacted in 2016. You can see the drop in production was 2.4 million metric tons in Malaysia. So why do we have to speak about Malaysia rather than Indonesia? Malaysia is the number 2 largest palm oil producer. Indonesia is number 1. Malaysia is number 2. Thailand is number 3. Colombia is number 4 together with Nigeria. Malaysia is important because the global market looks at Malaysia's supply and demand, although Malaysia only produces about 20 million metric tons compared to Indonesia, which produces 50 million metric tons. The reason is because Malaysian supply and demand data is reliable, credible, timely, accurate, and global market looks at CPO futures and Bursa Malaysia in relation to Malaysian supply and demand. And that's why Malaysian supply and demand is very, very important. Published by the data is published by the Malaysian Palm Oil Board. MPOB is a bit like the USDA or Abivio in Brazil, credible data. Whereas in Indonesia, there is no such body that publishes such data. Okay, so going back to this chart, the orange line is all the anomaly from the average temperature at the sea surface level, right? So above zero point 0.5 means persistence of El Nino. Below zero point 0.5 degrees, I put the line there, means La Nina. So when you see the line going above zero point 0.5, that means very strong presence of El Nino. Trees can feel it, people can feel it, livestock can feel it. Extreme heat, less rain, lack of moisture content in the air. So this is some case studies. Flat production in 1989, 91, 92. Drop of production of 750,000 in 98. Then another drop in production in 2010, 2011, and then a big drop, massive drop in 2016. We also saw a drop in 2021, but that's not related to El Nino. That's mostly related to COVID. Okay, so moving on. In the next slide, I want to show you. Okay, I want to show you El Nino weather and prices. So what you can see is that prices tend to move between 20 to 40% about about 6 months after El Nino, right? So El Nino happened, we felt the lower production, and prices tend to go up. Okay, so here I'm showing you the chart. So if we have a very strong El Nino in 2026, July, August, September, and a strong one persisting into 2027, how will pump prices look like? So we are now thinking there is going to be very bullish outlook there. So here I put some scenario numbers just to give you an idea. So remember, El Nino can be weak also. It can be moderate. It can be strong. It can be very, very strong, like we felt in 2015 that impacted production in 2016. So if this happens, what will be the impact on production? So production will decline very rapidly, and it will take some time, sometimes even 1 year, 2 years to recover that output. So we are looking at a very risky production outlook in the second half of 2026 and into 2027. Nobody can tell us exactly how severe will be the El Nino. There's very high chance, 63% chance of El Nino happening, and then there is very high chance of going to be a very strong El Nino. So we go by this information from the National Oceanic and Atmospheric Agency. If you go by this number, their number, we can expect it's going to be serious trouble for production going forward, and that means we can expect quite bullish price outlook. Let me move on. Okay, here I just put the another scenario here. So the previous scenario was on weather impact on production. Here, I want to just give you a feel of the geopolitical tension, crude oil price outlook, and palm price outlook. Remember, palm is traded in Malaysian ringgit. So if you want to convert this into dollar, you just have to divide by 4. So of these four scenarios, A, B, C, D, I think scenario B is most likely. You can disagree with me. I think the conflict in the Middle East between US, Iran, Israel sometimes is going to be long. It's not going to end quickly, it's going to be prolonged. There will be negotiations. There will be on negotiations, yes. There'll be no negotiations. They'll be angry. They'll come back. There'll be negotiations to negotiate something, and there will be conditional reopening of the Strait of Hormuz. So, not open without conditions. There will be unblocking and then maybe block again and then unblock again. So, unsettled but very long. In that case, crude oil prices should range between 80 to $100. Now, crude oil prices have dropped a lot to about 70, $73, in which case palm prices will be between 4,005 to 4,008. Currently, palm prices are at 4,500 ringgit. So 4,500 divided by 4 is about $1,125. And if palm prices are at the high end, 4,800, which is about 1,200 US dollars per ton. But if scenario D happens, this is a very bad scenario. We hope it doesn't happen. Full and widening escalation. Other countries are involved. There is military war. There is sanctions. There is very elevated, sustained, prolonged risk to the Strait of Hormuz. In which case, we can expect crude oil prices to jump $120, and palm prices can be 5,000 ringgit or even higher than that. Okay, in the next slide here, I put everything together. I put the El Nino, biodiesel, and the geopolitics all together. And you can put your money wherever you want, bullish, super bullish, bearish, moderate bullish. So I'll be happy to hear what you think. I have a feeling that we are between A, bullish, and D, moderately bullish. So that means I'm not really thinking about that. So I'm not thinking about bearish scenario at all. So I think there will be crude oil prices will remain high. The mandate in Indonesia B50, which is going to be launched tomorrow, That means Indonesia will use 16 million metric tons of CPO in their biodiesel. So 16 million is not be in the global export market. It will be inside Indonesia. Indonesia is going to use it for themselves. So who's going to make up for that shortfall? Malaysia is a small producer. They produce 20 million, 16 million is not enough yet. Thailand is 3 million tons producer, mainly exporting to India. Colombia is a producer. Ecuador is a producer, but small producers. Can they make up for the shortfall? I don't think so. So palm prices can remain high between 4,500 to 5,000 ringgit in scenario A. So let me move on a little bit. Okay, here just a conclusion. So this year we are expecting Malaysia Indonesian production to be down by 500,000 metric tons. So last year Malaysian production was 20.28 million metric tons, record high. But trees cannot produce record high year after year like soybeans. Soybeans, I see Brazil is another record here, another record here. Palm cannot do that. Palm is one time you plant, 24 years, and product trees have to rest. There will be production, but not record high. So trees have to rest and then come back again. And if this is a resting year now, 2026, but if El Nino is going to hit, this rest is going to be bad rest. That means yields will be depressed further before it recovers in 2028 maybe. Okay, first half was volatile. A lot of focus, a lot of focus on commodities, on equities are all dependent on one thing, and that's the energy markets. Energy market means crude oil, LNG. These two things are the anchor, if you like, in driving commodity prices, equity prices, and gold prices. So while current production, June, July, August, is good in Malaysia and Indonesia, inventories are inching up slowly, and this is keeping the cap on any price rise. However, any further updates, we will get an update to this week on the latest numbers for June from NOAA. If the numbers are zero point 0.5 and above, most likely it will be 1, I think, 1 degree Celsius above the average, then we can see commodity markets will be aggressively pricing in the weather risk. I don't think palm has fully priced in the weather premium yet. Then we have biofuels demand, as I said earlier. We have geopolitical tension that is ongoing, and then the volatility in the crude oil market. All these can push palm prices from current level to near 5,000 ringgit, which is $1,250 per ton. So higher prices on the futures, higher prices on the cash market going forward into the second half of 2026. Palm prices will enter 2027 with significant upside from developing El Nino, and this could tighten supply through lower yields and reduce production. So we have lower production forecast for 2026 for Malaysia by about 300,000 metric tons, and lower still in 2027. So that means production can fall once again to below 20 million to about 19 million metric tons in Malaysia. Okay, I think that's all I wanted to say. The rest I've said earlier. So I will stop here and happy to answer any questions. Thank you.
Thank you so much, Doctor. Thank you so much. We actually have a question from the audience. So here's a question from Sabrina. You listed five main factors that contribute to the impact. With the last El Nino, here it is. We have on the screen. What are the other factors that you would think that are the drivers? You walked through us, and I'd like to add you something on top of that. So we mentioned, you have mentioned the energy complex. So higher
Mm,
crude oil prices will pull veg oil prices higher. Um, you have mentioned the export restriction from Indonesia
mm,
and also biofuel demand, right?
mm,
And there's on the biofuel demand, there's this political factor, because in the end of the day, the biodiesel mandate will be a political decision. And
yep.
historically, we have seen not only in Indonesia, but also down here in South America and Brazil, governments trying to push higher mandates, trying to address higher oil prices. But then when veg oil prices spiked, they try to go
Mhm.
back and, okay, like, no, let's not increase this mandate. Maybe let's postpone this increase or even a reduction on the overall mandates at the current situation on the markets that you cover closely, especially in Indonesia. Do you think the B50 will hold,
Mm.
or that that feedstock demand will still be a main supporting factor for the overall veg oil complex prices?
Yeah, I think that's a good question. So, biodiesel is a structural support. I mean, without biodiesel, if the Indonesian government says tomorrow, sorry guys, no more biodiesel, we're going to cancel it, I think palm prices will fall from by about $500, about 2,000 ringgit easily. So
Mhm.
palm biodiesel is a big structural support there. Will the Indonesian government do it? I think a lot of people are doubtful. But if you look at the Indonesian record, the record is quite good. The record is quite good. They say it, they do road test, and then they will implement. The main problem is the timing. Timing is their biggest problem. They say they're going to do it in January, and then they don't do it in January. They say we're going to do a test in June. They say it's going to happen in June, and then they say we're going to launch in July. So what is that supposed to mean, so now the latest is they're going to launch in July. What does launch mean? Launch mean you're just going to carry a flag and say B50, or what does that mean? That means we are not there's not B50 is not ready. That's what it means. It means it's going to be ready sometime this year. So what will happen? I think the implementation will happen in fourth quarter of 2026, OND, October, November, December. And then in January, it will be spread to the whole country, nationwide implementation. And we are forecasting 16 million tons of CPO for their biodiesel production. So what Indonesia is good at, so the positive thing about them is they do not go back. I mean, they say B50
Mhm.
means once they implement B50, they B50, B60, they don't go reverse gear, like some countries they do. I mean, Thailand does it,
We did
but that's
it. Yeah.
Thailand is that's their style. They say, hey, we have so much
Yeah.
CPO, we will do. We don't have CPO, we pull back. I mean, Brazil also does it. They also kind of like not sure sometimes. Go, not go. B14, B15. Yeah, yeah.
Yeah. No, thank you so much. I got also a someone interest on the possible impacts on cocoa. So currently, we have captured the some early signals of the current crop in Côte d'Ivoire. If you look at it, it has been a crop with unprecedented drought stress throughout, especially the reproductive period of the crop, which is basically what set the yields. Will set the fruit formation of cocoa. And when you look forward, we are also picking up a higher. It's not as severe as palm, as coffee in South America, but we are picking up some early signs of heat stress for
Mm,
the rest of the season and for next season as well. Something that caught my attention when I was looking at the data of our climate signals is that reproductive stage for the next crop, we are forecasting a quite higher than the average wet risk, which might worsen their phytosanitary situation over there. Lots of drought means higher pest pest risks, and yeah. All right, everyone. I think we are on time. Thank you so much, Doctor, for your presence
Yeah,
here. Your
no
insights
problem.
were quite incredible and interesting to hear. Hope everybody have a great day, and thank you so much. I see you all soon. Bye bye.
Thank you. Thank you. Bye bye. Thank you.
Bye.